I now hand the conference over to Mr. Adidev Chattopadhyay from ICICI Securities. Thank you, and over to you, sir.
Yeah. Good morning, everyone, and thanks for joining us on the call today. Today, from the management of ITD Cementation India, we have with us Mr. Jayanta Basu, the Managing Director, and Mr. Prasad Patwardhan, the Chief Financial Officer. And now I'd like to hand it over to the management for their opening remarks. Over to you.
Thank you, Adidev. Very good morning to all of you, and thank you for joining us on this con call for the Q1 results of FY21. I will briefly touch upon the results and the numbers and then hand over to Mr. Basu for his comments, and then we'll take your questions. As you are all aware, this quarter has been significantly impacted by COVID. April was a month of complete lockdown, and in May as well, we saw an exodus of labor from various places, and that has had an impact on our operations in the quarter ending June. On a consolidated basis, we have reported a revenue of about 400 crores for this quarter as compared to 740 crores in the quarter ending March 20, and a year back we had a top line of about 700 crores. So you can see the significant impact on our revenues in this quarter, and that has impacted the operating margins as well. So, that has resulted in profit after tax. At a PAT level, we have reported a loss of about 17 crores. As far as our debt is concerned, the gross debt as of 30th June is about 450 crores, and net debt is about 300 crores. The silver lining is our order book. Our order book stands at about 11,335 crores. In addition to that, the new orders that we have secured in this quarter are just about 80 crores. But the good news is that after the end of this quarter, we have secured good orders worth about 1,200 crores so far. These are largely in the marine segment and metro segment as well. And in addition to that, we are lowest on orders worth another about 1,500 crores. This is again one more marine order and one high court building order from the northeast in Bengal. So that is as far as our order book situation is concerned. I will now hand over to Mr. Basu for his comments, and then we'll take your questions.
Good morning to you all. This is Jayanta Basu. My colleague Mr. Prasad has briefed you about our quarter result up to June 2020-2021. I'd like to touch upon some key aspects of our operation and the challenges what we are facing, and what are the opportunities lying ahead. If you see, our revenue is down by around 44% during first quarter as compared to same quarter last year, and that is almost like an industrial. We are as part of the industry. If you see the other companies also, they are in that range, 55 to 60%. And but our collection was good. That is one good thing. Though the revenue is down by 44%, but our collection is around 90% of similar quarter last year, which is something is helping us in liquidity. The basic issue of COVID, which the construction company has largely affected because of the non-availability of the labor force. Today, when we work in a normal situation, we have around 18,000 to 20,000 labor at any given point of time. During the COVID, in the first quarter, it came down to 8,000 to 9,000. But I'm happy that gradually things are changing, and now we are almost having 70 to 78% labor force, as it should be the normal case at site now. I will touch upon a couple of key projects and our performance thereof. And I'll start with the Mumbai Metro. Mumbai Metro, so far we could do around 60% of the total progress. And by end of this year, we believe that our tunneling will be completed. There are 3 tunnel boring machines. Now 2 are working, and all these 3 will be completed by end of this year. Second, the underground metro is at Calcutta. We call it underground UG2. And UG2, as all of you know, that we had some challenges we faced last year, but we could overcome them very quite okay. Today we have got another 1.5 months to go to complete the tunnel in this phase 1. So by end of October, we hope the tunnel which is going on now will be completed. Work is going on. But later on, the same tunnel boring machine will start from other direction. That will take us to end of March next year. So we hope that by March next year, our tunneling at Calcutta Metro will be over. Apart from this Calcutta Metro, we have got another one underground work in Bangalore Metro, where work has just started. Unfortunately, the commencement of the work and COVID is simultaneously, so we could not do much. But we have just started our temporary initial setup. Permanent work will start from end of this month. And as you know, we have got 2 elevated jobs. One is Bangalore Metro, one is Nagpur Metro. Both are in the verge of completion. Bangalore Metro progress is around 80-83% overall, and Nagpur is around 90%. Apart from the MRTS, we have got a couple of big marine jobs. Udangudi progress is around 40% so far. Haldia is a verge of completion. Andaman we could do around 40%. And we are having a overseas job at Myanmar, which is progressing as per our expectation. The major activity, which is called piling at marine condition, have started since last 1 month, 1.5 months. And then if we take it to the other sector like airport, Trichy and Pune, despite of the COVID effect, still we could do some progress. And our so far progress is around 25% overall. We have got another big chunk of job in building and blasting sector, that is in Ircon at Sikkim, where the progress is really affected because of COVID situation and due to lockdown, so we could not do much. Now coming to the working hand position, as Mr. Prasad has said that our working hand position is still very healthy, which will be around 12,000 crore plus as on date. And in last quarter or till date, YTD till date, we have secured around 1,300 or 1,400 crore of job already secured. And I am glad to say that we have got the LOI for a bridge to be constructed over River Ganga in Allahabad, a 500 crore job. This should be a signature project for us. We have secured one contract from Adani Group to construction of breakwater, which is going on for quite some time, around 400 crore job. We have also secured one metro job in Calcutta under RVNL and a small marine job for Adani at Krishnapatnam. In addition to these jobs, we have got another 3 jobs which are in L1 position. I am also glad to say that there is a job in Project Seabird, 1,200 crore value L1 bidder, tough competition. And in the phase 1 was done by us. This is phase 3. So we are expecting LOI sometime during October or November, which should be a good job for us. In addition, there is a small, not small, around 300 crore job construction of High Court building in West Bengal. We are waiting for the LOI. See, all these, I must say that the future, there are a lot of plenty of opportunities we have with the existing jobs and jobs which are in L1. And one thing I want to touch upon here, if you see our financial result last quarter, though we have got around 1,200, 12,000 crore work in hand, most of them, around 5,000 odd crore, have just started. So I'll repeat my comment what I had last time. They haven't crossed the threshold limit of declaring margin. And job like Delhi, we have got a building job from CPWD, Ircon jobs, and some other jobs in Myanmar also. So though their progress is happening, but we are recognizing only revenue. We are not able to recognize the margin because they have not crossed the threshold limit as per our company's norms. So I hope during next quarter, little bit, maybe third quarter, we'll see that this helps us in increasing our margin. And I'll touch upon some other jobs which are in pipeline. Naturally, this question will come. Probably around 17,000 crore jobs we are pursuing. Those who are in various stages now, some under tender, some pre-qualification stages, and bulk of them are from marine. So this is in nutshell our operational performance, and little bit I have touched on future. I will now hand over to Prasad for any further comments from him, or you can start your question and answer session.
Thank you, Mr. Basu. We'll now take your questions. So request Adidev to, assemble the queue.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yes. Good morning, sir, and congratulations on a good set of results given the COVID situation. So my first question is, sir, can you please comment on the labor availability across sites? Are you facing any challenges, and what kind of challenges? And do you see this revenue ramp up to 1,000 crore, which you have guided earlier? Is it possible during Q3, or has the milestone shifted?
Yeah, thank you, Mr. Mohit. I have just touched upon the labor situation. During normal situation, we manage the projects with around 18,000 to 20,000 laborers. During the COVID, during March, April, it came down to 8,000. But now, from mid of August, it is gradually becoming more and more. Today, we have got at site around 14,000 labor ballpark, which is close to 70 to 78% of the normal situation. But one more challenge we have, it is only the number, but when the labor comes back to site, we have to keep them under quarantine. Sometimes 14 days, even sometimes 21 days as well. So it is not that the number of labor, we have to also deal with the quarantine situation. But things are improving because our progress is directly proportional to the availability of the labor force. Apart from labor force, the other things which affect our progress like liquidity and supply chain, those are more or less under control, I must say. And as far as I don't want to give any guidance on our revenue, but as you see that this time it was 56%, I think quarter 2 will be a little better than that, maybe around 65 to 78%, 70% of last year, and it should gradually increase quarter 3 and quarter 4.
Sir, is the situation eased out across sites, or you are still facing some of the other issues in some of the metros, or Shivalik Rangpo, or CPWD Delhi? Can you just comment on all these, especially on all these 4 or 5 projects which are likely to contribute a major share of revenue going forward?
Yeah, we have CPWD problem is little unique. It is not related to COVID. Partly related to COVID, but it is more related to the availability of the front, because they have to give us some front by dismantling existing buildings, which is going very slow. So that is why there is the effect of COVID plus front availability as well. Shivak Rangpo, it is also little delicate, sensitive area. So, the people are very much conscious that the railway people are coming from outside and they are spreading COVID. So they are very conservative, so we have to go very slow on that. And now and then there is a lockdown, so 1 or 2 days, 5 days, 6 days, go slow. So these 2 projects is going slow because of all these issues. But other projects, apart from labor, I don't see much of a problem.
And so last question, sir, what is the average life cycle of our entire order book, and have you got any extension from the clients for the COVID situation?
Yeah, if you see, our order book is now around 1,200 crore plus, 12,000 crore plus, which should be around 3.5 years based on today's rate of progress what we do. And you asked me about the extension of time as well, isn't it?
Yes.
Yeah. From the client side, there are several issues. One of them is extension of time. And if you know that there is a general guideline by MH that at least 5 months extension of time, normally they are granting to the most of the contractor because of this COVID situation. So we don't see much of an issue on that, getting extension of time from the client.
Understood, sir. Thank you, sir. Best of luck.
Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah. Good morning, sir. Thanks for taking my question. So two questions from my side. One is, sir, just wanted to check, is there any update on the bullet train project, and also regarding the Central Vista project, the parliament that is being built, are we basically looking to bid for that?
Yeah, I think you have asked for two projects. One is bullet train, one is Central Vista, isn't it?
Yes, sir. Yes, sir.
Bullet train project, it is going really slow because of whatever maybe the reason, maybe the budget, what was projected earlier, now reality is not like that, becoming very costly. So things like that, it is going slow, and we really don't know when it will likely to take up. But we are there, of course. We are there, and somehow or other we'll get into that. And regarding Central Vista, it is also a very big concept and project. And as you already know, the Parliament building has already been probably awarded to Tata Projects. They became lowest day before yesterday. But that is not the end of that. There will be some other structures will come. So let us see how it goes.
So would we be interested in bidding for that, the new packages that they come in Central Vista?
Of course, we are interested, but as you know, it will have its own pre-qualification criteria. We have to see whether we get qualified or not. So that will be the prime challenge we have.
Fair enough, sir. So my second question was to Prasad, sir. Sir, just a small clarification and accounting kind of a question that I just wanted to ask you. Sir, in the Q1 results, if I look at the gross margin, so that is basically just if I take the cost of goods consumed as a percentage of sales, that has come down significantly. So it generally used to be around 35-40%. In this quarter, it's just around 21%. So any reason that the cost was so low in this quarter, because of either revenue booking or whatever might have been the reason?
No, it is just an impact of the lockdown. Nothing different has changed. We would have procured the material, but because of the availability of labor, the type of work that was carried out, probably the material consumption was lower in this quarter as compared to the earlier quarter. So there is no other reason for it.
Okay. No specific reason for
in that sense because of COVID, and that is why the numbers are looking the way they are.
Right. So other than that, there is no any change in accounting policy or any other external thing, nothing like that.
No change in the accounting policy.
Right. Sure, sir. That's it from my side. If I have anything more, I'll come back.
Okay.
Thank you, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Aman Sontalia from AK Securities. Please go ahead.
Good morning, sir.
Good morning.
Sir, my question is, what is the threshold limit when we recognize the business?
Sorry, I didn't get your question. Can you come again?
Sir, there is a policy of the company that after this much of work, you recognize the business.
Yeah.
So what is that limit, sir?
Generally, it is 10% of the order size, order value.
And sir, what type of EBITDA margin we can expect from the orders which we are getting?
Well, the EBITDA margins, vary from segment to segment. We won't be able to comment on, individual projects, but typically the marine segment tends to give us better margin. Marine segment, the underground metro segment, the tunneling segment, the margins are better as compared to an elevated metro project or a building project, something like that. So the margins vary from project.
So on an average, you can expect around 13 to 14% margin?
Well, that, it will depend on the mix of projects that are getting executed. So it will not be possible to put a general number, on the EBITDA margins, it is a mix of, which segment is contributing how much to each quarter's revenue. But broadly, as I indicated, these 2 or 3 segments tend to give us better margins as compared to an elevated metro project, for example.
Okay, sir. And what type of run rate we can expect from Q3 onward?
The conference is now being recorded.
In hand, and we are already bidding for a lot of more orders. So whether we have so much of manpower to handle all these orders?
Well, see that there are a lot of jobs in pipeline, as you rightly said. But I don't think there is an issue in the resources. We have got engineers, those who are getting free from the project like Bangalore, Nagpur, and Haldia, Mumbai Metro. So many of the projects also going to be getting completed. So those engineers will be free and we'll utilize them. And definitely there will be some recruitment as well, which is a continuous process. So I don't see that's a big challenge. Yeah.
And sir, one last question. How big this marine business is going forward? What type of orders we can expect in this segment in future? And what type of competition we can face in this segment?
Competition is, it has come down from what it was 2-3 years back. Because a couple of companies, those who are there, they are no more there in this business. So it is limited to only 3 or 4 companies like us. And as I have told you that there are around 8,000 crore jobs in pipeline in marine. So we have to see how much of them we get. Out of 8,000 crore, at 1,600 crore already were L1. One of them is a project Seabird, 1,200 crore. And another is, which one? Bijinjam. So this is the broadly picture about marine business.
Okay, sir. So if we got all these orders, so if suppose the order which is right now 12,000 crore rupees, and if it crosses 15 or 16,000 crore rupees, whether the timeline is 3.5 years for the whole orders, or it will take some extra more time for complete those orders.
No, it depends upon when this project comes. Typically, marine job, it depends upon the weather condition, as you know. If you get a job now, then you have got another 6-7 months good time to execute. But if you get a job in the month of April, that will lead to a problem. So it is very difficult to predict in that way how much time it would take. But normally, typically a marine job, it takes around 2 years to 3 years time to complete. Yeah.
Okay, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Hello.
Yeah.
Yeah. Hi, sir. Thanks for taking my questions. So, 3 questions from my side. I think.
Mr. Khurana, can you speak closer to the answer, please?
Yeah. One sec. Am I audible now?
Yes, sir.
Yeah.
Sir, I think, Jayanta sir, I mean, in your opening remarks, you spoke about some 17,000 odd crore rupees of opportunity landscape that you see. Would you be able to break it down into segments? I think, you said it will be largely marine, but if you could help us understand how much of this is essentially metro, elevated, or underground, or how much of it is marine?
Yeah, broadly I can tell you, marine, as I told you, around 8,000 crore, out of which around 1,500, 600 crore already you are L1. Metro will be around 3,000 crore. Bridge and sewer project in Mumbai will be around 3,500 crore. And for the building and airport sector, another 3,000 crore. So put together 16 to 17,000 crore.
By any preference, given the fact that your urban is now a very large part of the order backlog. So does it mean you would look for more of marine now because you would want to have a balance between urban and marine, which is where you get to have both margin as well as growth? Or we are agnostic in terms of the project that comes to us?
If you see our philosophy-wise, we continuously focus on marine and underground metro and airport. These three sectors definitely will be trying our best.
Sure, sir. Sure. And sir, on our Bangalore elevated, I think we were facing issues with some work front for the last package. So has that come in now, or is it still to come to us?
There are 4 packages. Each package is ranging from 400 to 600 crore. Out of that, 3 packages are through in the sense that we know that when it will be completed.
Sure.
Just because of COVID, it got delayed by 3-4 months. So hopefully by first quarter of next year, it will be completed. But the one project, we still do not have enough for a front. Around 30 to 35% front are still not available. So we are talking to a client and see how best can be done on that.
Okay. But could there be a case wherein you would finish whatever is available and exit the project, or you would have to wait for them to kind of give the entire and finish
no,
it?
Because that doesn't help, because we have to complete the job. Leaving a job doesn't help. Only thing you have to deal with the client, how to handle the commercial issues.
Okay, sure. And the underground metro, we were supposed to have 2 TBMs, the old TBMs that you were supposed to refurbish and then get them to the site. So what is the status there now?
TBM should have been there by this time, but because of COVID, the places where it is getting repaired also under shutdown. It has just started, and it should be ready by November, so that you can commence the TBM work sometime during first quarter of next year.
Sure. And Prasad, 2 questions from my side. So one was on P&L. So when I look at our employee cost this quarter, sequentially this is up. Given the fact that there was a down, we were under the impression that there could be some reduction. So how do we explain this? Because March was significantly low. From 90 odd crore rupees of run rate that we used to have, it went down to 70 odd crore rupees. And then suddenly it's back at around 85. And in continuation to this, when I look at our presentation, so you give us number of permanent employees, and there appears to be sharp reduction on a sequential basis. I think the presentation says, the March presentation says it was around 2,900 odd people, and it is at around 2,100 now. So how do I reconcile these two, wherein the number of employees have come down, but my employee bill is up?
I'll answer your question. On the manpower cost, see the March numbers, the numbers that we had reported in the March quarter, there was some write-backs of excess provisions,
Sure.
So because of that number was depressed in the month of March. Whereas in the June quarter, although the labor, there was an exodus of labor, we have been continuing to pay the wages and the salaries in full. So it is the normal labor cost. There is no additional cost that has been considered in the labor cost here.
Okay. And the run rate would remain the same, or it will go up because we are yet to have another around 22% of labor come back to us?
No, it should be more or less at the same level. I don't see any major variation in the labor cost. Your second question was regarding?
So this was, the number of employees are down.
See, I am not sure of the number that we reported in the previous quarter, but what we have reported here is the number of permanent employees that we have on our books.
Okay.
So in the opening remarks, the manpower strength that we mentioned was including the labor that is working at all our project sites.
Sure.
So what we have mentioned in the presentation is only the permanent labor force, which is about 2,000 plus. So there's been no change. Probably in the previous quarter, we may have included the project-based employees as well.
Okay.
That is why the number was at about 2,800. But there has been no significant change in the manpower numbers.
Sure. And just one last from my end, if you could help me with the standalone debt and standalone cash.
Yeah. On a standalone basis, just give me a minute. Yeah, the standalone gross debt is 278 crores and the net debt is about 145.
Sure, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah. Good morning, sir. Sir, first, continuing on the employee expenses part, so are we booking the cost for the permanent as well as the casual labor in the employee line item, or the casual labor gets booked in the contracting or other expenses?
No, it depends on the nature of contract. If it is a subcontract with material and the labor cost is borne by the subcontractor, it will not come here. But whatever labor we are employing directly, the entire labor cost is coming as a part of the employee cost.
Okay, sure. So secondly, on the the pipeline. So what is the status of the JNPT 4 terminal bids?
Okay, the JNPT, all the bids are in place with the client now, and as because they are now tackling their own operation issue, which was affected by the COVID. So when I spoken to them, they said it may take some time. Maybe beginning of next year they will start discussion with the prospective bidders.
Okay.
Yep.
Sure. Thank you.
Thank you.
Thank you. The next question is from the line of Sanjay Dam from Old Bridge Capital. Please go ahead.
Thank you, gentlemen. Just one question I had is that when I look at when we look at our order book for the last 5 years, it has doubled, more than doubled. So and when I look at the gross block, that also has kind of seen a kind of similar increase. So when we look forward, is it that our profile of equipment that is necessary now for the next maybe a few thousand crores of order intake? Would we see the same level of capex intensity that we have seen in the past?
Good morning, Sanjay. I think we should see the same level of capex intensity unless we need to invest substantially in any new equipment. For example, for a tunneling underground metro tunneling project, if you have to invest in acquiring some tunnel boring machines, for example, then the capex requirement would go up substantially. But most of the equipment that we have today can be used on the projects in different segments. So this will largely be replacement capex, and maybe if the order book grows, there may be some new equipment that we may purchase. But the intensity is expected to remain the same. We don't see any significant change in the intensity.
And just to understand, see, the margin profile of the company has changed over a period of time because the mix of the order backlog has also changed. So when you look at when you look at the returns from the business post the investment in equipment that you do over a period of time, which covers, say, the life cycle of a project, say over 3.5 years, right? Is usually what you have been doing. So over a block of 3 years, say the latest 3 years versus the previous 3 years and the 3 years before, and the next 3 years, do you see returns shrinking, or would you say that that's been largely similar?
No, we expect the margins to be largely similar. Actually, if the competition decreases, then the competitive intensity, if it goes down, there could be an improvement in the margins as well.
Yeah, no, margins is fine, sir. What I meant was that when you look at the free cash flow that the business generates, so one is that you make so the business has a cash flow, and you have to invest in equipment.
Yes.
Right. So when you net that off, if you say that your investments in capital equipment, it's worth the while, even with that high intensity of because we see the cash flows from the business growing over time, but if we look at the net cash flow out of the business, that's really not grown commensurately between the time you had, say, a 6,000 crore order book and when you have a 12,000 crore order book.
Okay, this is Jayanta Basu. I like to address this. In terms of the capex, large chunk of the job what we do in marine, we normally hire machines from the market, so that the piling barges and the cranes, big cranes and all. And when the job is over, we can give it back to the party. So that is how we are able to manage our capex quite efficiently during last couple of years. And if you see, there is no large variation in our capex. And in terms of the return, I don't know, Prasad, you will like to comment on that? Yeah.
Yes, Sanjay, just to answer your question, when we bid for any project, we consider the proportionate cost of, the equipment also in our bids. So, all that cost is factored in when we bid for any project. And on the intensity or the capex that we are doing, I just answered that question earlier. So, if there is anything else that you want me to address, please let me know.
That's about it, sir. Wish you all the best.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good morning, sir, and thanks for taking my question. Sir, just wanted to understand the bid pipeline as you have highlighted. Give us the projects you are targeting. So in marine, as you said, already L1 in Seabird and the Adani Vizhinjam project. So for the balance, can you give us the breakup? Because you're talking about the JNPT and again, similarly in the metro segment and the sewage projects from Mumbai.
Yeah, I have briefly mentioned you the number. If you see in marine, there are a couple of big jobs. One is GCPTCL at Gujarat, that is in Dahej, Gujarat Chemical Port Terminal Limited. There is another job in Colombo from Adani, and so these are the big jobs in marine. And MRTS, as you know, Delhi Metro for underground, and then underground metro at Surat. For the bridge and sewer treatment plant, as you know that in Bombay there are new sewer treatment plant which will be coming. That is at Malad, Orly, Bandra and all. And there are a couple of airport jobs in division which handle the buildings. So these are the major jobs here now in the pipeline.
So this airport would be in which city?
Airport, we have a team that we have this.
The bid pipeline.
That is a Tuticorin, the south of India. Tuticorin airport, new airport is coming there. Yeah.
So this Gujarat Dahej port project and the Colombo project in Adani is of like more than 1,000 crore plus. Sir?
Yeah, they are all close to 2,000 crores each job.
Okay. Right, sir. And sir, Prasad sir, can you just give us the breakup of the balance sheet if possible, debtors, mobilization advances, creditors, inventory, retention and billed revenue as of June?
That is not readily available with me right now. But, the net working capital has, as Mr. Basu mentioned, we were able to collect a lot of money from our clients in April and May. So our debtor position has improved, but overall we are seeing some, increase in the working capital number of days. Right now, the breakup of the debtors, creditors, etc. is not readily available.
Okay. And sir, any mobilization advances are we expecting now because we are now started receiving LOI for most of the projects. So what is the mobilization advances you are expecting in the coming months?
Well, we have still not taken all the advances of the projects that were awarded to us last year. So, as per the contract conditions, we have taken maybe part of the advances. And the remaining part of the advances will be now taking in this year. So, one part is the advances on the earlier orders, and these new orders, once, we start executing the orders, we will draw on the advances for these new orders as well.
Okay. And sir, can you give the non-fund limit and fund limit and what is the utilization levels?
Non-fund based limit is about 3,300 crores. Our utilization is about 75-80%. And fund based is about 650 crores, and utilization is about 50-60% of that.
Right. Thanks a lot, sir, and all the best.
Thank you, Jiten.
Thank you. The next question is from the line of Bajraj Nahar from Milli Consultant. Please go ahead.
Yeah, good morning. My one question only. since you are expected to get very large orders in addition to the existing order, whether you will be in a position to deploy more machines, more manpower and other resources to complete in case if you are awarded say 10,000 crores worth of order more in the same period of time. I mean to say that can you open many sites of the new projects?
Yes, I think we have addressed this issue. When the new orders are coming, there are some old orders which are getting completed, and those orders are also quite big. If you see, Bangalore Metro is getting completed, Nagpur Metro getting completed, Bombay Metro is getting completed, all the marine jobs are getting completed. So basically, the manpower in terms of the engineers will be free, and always we recruit, keep on recruiting some people. There are now good people available in the market because many of the companies are not doing well. In terms of plant and machinery, we have a mix of rental plant and our own plant. We have to buy some plants which are very specialized, and that is a part of business, and we are quite confident that we'll be able to manage it with the resources what we have and what we plan for.
No, say like right now your turnover is in the range of about 3,500 to 4,000 crores.
Yeah.
So in case if you are awarded large number of projects, whether you can ramp up the turnover to 6,000-7,000 crores per annum going forward?
6,000-7,000 crores, not immediately tomorrow, maybe after 2-3 years. But yes, around we will be able to manage around 20 to 30% growth year-on-year basis. That is quite possible.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Shreyans Mehta from Equirus Securities. Please go ahead.
Yeah, thank you for the opportunity. Sir, 2-3 questions from my side. One, if I see the console and standalone numbers, is it fair to assume, that the results primarily, the degrowth which we've seen, that is primarily contributed by the standalone, basically our marine projects, and metro is still doing good?
No, we have metro projects both in the standalone as well as in the consolidated financials. So, I mean, that may not be the correct conclusion.
Okay.
Marine projects are only in the standalone, get reported only in the standalone numbers.
Correct.
And consolidated includes metro projects as well.
Correct. Okay. Second, sir, my question is pertaining to our next 2 to 3 years view. Say, for example, now, our order book would be majorly, coming from the standalone execution. So how do you foresee the margin profile and the working capital going forward?
No, as we answered part of this question earlier. We are hoping that the margin profile will improve because all the new orders that we have got are in the standalone books. That is one. Secondly, these orders are largely in the marine segment or in the underground metro segment where the margins tend to be better than, in an elevated metro or, some of the other segments. So we are hoping that the margin profile will improve and the pressure on working capital will also be eased because these projects are likely to be cash flow accretive to the company.
Okay. And the last thing, what would be the debt on the Bangalore Metro project?
Bangalore Metro debt now would be in the range of 160 crores.
Okay, so that has come down significantly.
Yeah, it is coming down progressively.
So probably by year end, this 160 will also go off?
Well, I am not sure it will go off fully because, the execution timelines of the project are also likely to get extended a bit because of Corona.
Correct.
So, difficult to give you any number at this stage. But yes, the intent is to reduce the Bangalore Metro debt as the execution progresses.
Okay. And sir, one last question. So basically, once this debt comes down, so is it fair to assume that debt levels, what we are seeing currently, are the peak levels?
Well, that is the debt level is a function of an order book and the capex that we incur. If an order book which has been growing for the last 4-5 years, if it were to increase further, there will be some, proportionate increase in our working capital debt as well. But, our endeavor will be to keep the debt as low as possible.
Okay, sir. Thank you so much. That's it from my side.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Hello. Yeah. Thanks for the opportunity once again, sir. So my question regarding TBMs, so I think most of the TBMs comes from China, right? So does it create any kind of issue in terms of, importing TBM and deploying them? Does it increase our cost given everything, given geopolitical situation?
Yeah, the TBM which will come from China will definitely face problem. Fortunately, our TBMs are all available for the job what we have now. Otherwise, our manufacturers are all from Europe. So, and they have got alternative places to manufacture the TBM, not only in China. So, yeah, that is my answer. But definitely, if it is from China, it will face some problem. Fortunately, we are not in that. Yeah.
So, is there any cost difference between deploying Chinese or let's say some other TBM and what could be the range?
Normally, if you have it from Europe directly, it will be a little bit costly because of it will be a prime product. I don't know. I will not be able to tell the exact number. It will be a little bit costly. Yes.
Sure.
Yeah.
Understood, sir. And secondly, sir, this Karwar base order, marine order, this is completely marine order, right? Building dry berths and all those, right? It's a very old order floated in 2018. Am I right?
I couldn't get your.
No, I was asking about Karwar base.
Yeah. You
are completely
right.
marine order, right? It's not building order.
Completely marine order. Completely marine.
Okay, understood. Thank you, sir. Thank you.
Thank you. The next question is from the line of Aman Sontalia from AK Securities. Please go ahead.
Sir, my only question is that since Chinese players are not allowed to participate in the tenders right now, so whether Indian construction company is going to benefit a lot from that?
See what was happening before. Chinese, they never used to participate alone. They used to come as a joint venture partner. So now Indian has to find out a different joint venture partner other than Chinese if they are not getting qualified. But at the same time, the job where Indian could get qualified on their own and if the Chinese competition is not there, to some extent definitely Indian will get benefited. Yes.
Okay, sir. Thank you.
Thank you. As there are no further questions, I now hand the conference over to the management for closing comments.
Thank you, Adidev, and I would like to thank all the participants for their questions and continued support to the company. We hope to interact with you again next quarter. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference.